Are you still making your trading decisions based on a single time frame? Well, there is nothing wrong with that. What do you think are your odds of winning if all three time frames are in alignment? In this video, I want to show you a multiple time frame trading strategy that dominates single time frame strategies. This strategy is the triple screen system written in Dr. Alexandra's Elder's book, Trading for a Living. By the end of this video, you will walk away with a powerful strategy that trumps most single time frame trading strategies out there. So make sure to watch the video till the end. I've previously done a concise summary of his book, but didn't go deep into how you can apply the strategy. Still, that video contains many nuggets of wisdom, and I highly recommend you check that out after this. I will leave a link to that video at the top right and at the end of this video. But for this video, I'm going to focus deep on the strategy. Sounds good? Then go ahead and smash that like button and subscribe to this channel. We'll also do a giveaway for every single video, and I'll leave the instructions to enter as a pinned comment in the comment section below. So check it out if you are interested in participating in our giveaway that is worth $99. So let's begin by defining what the triple screen means. Well, the triple screen is a trend following system that uses three time frames. Triple equates to three time frames, and the signals are only generated when three time frames are in alignment. This strategy attempts to trade pullbacks that coincide with the primary trend. I will first provide you with an overview of the steps involved before diving into each individual steps, so keep watching. Step number 1. Select your triple screen time frames. Step number 2. Determine the trend. And step number 3. Identify entry triggers. The first step involves determining the time frames that you will be using. When choosing your 3 time frames, apply the rule of 4. This means that the period of each time frame chosen should differ by at least a factor of 4. It could be the H1, H4 and daily chart, or the daily chart, weekly and monthly charts, or any other combination as long as it follows the rule of 4. We will call them the longer time frame, the intermediate time frame, and the entry time frame respectively. You don't want to select time frames like the 30-minute, 1 hour and 2 hour charts, since each time frame doesn't differ by at least a multiplier of 4. When choosing your triple screen time frame, consider your trading personality and how much time you can devote to trading. If you are holding a day job, it might not be wise to select a time frame combination of 1 minute, 5 minutes and 15-minute time frames. Apply some common sense and you can always change the time frame if you find that it doesn't suit you. Now let me show you how to use the triple screen. For this illustration, let's use the daily, H4 and H1 time frames. If you read Dr. Alexandra's Elder's book, Trading for a Living, he uses a combination of MACD and the Force Index in his original system. These are momentum oscillators which you can use. However, I use a couple of other indicators to connect the dots between all 3 time frames. I will cover this in steps 2 and 3, so keep watching to find out what they are. Now, step 2 involves identifying the trend. This is done on our longer time frame as we want to position our trades following the higher time frame trend. This will increase our probability of winning and maximize our profits, since a higher time frame trend is likely to move more than a smaller time frame trend. To identify the trend, I use a 200 period exponential moving average. If price is trading above the exponential moving average, I lean towards bullish setups and look to buy. Conversely, if price is trading below the exponential moving average, I lean towards bearish setups and look to sell. You do not necessarily need to use the exponential moving average. You can use any trend indicator that you are most comfortable with. In this example, let's zoom in onto this portion of the chart and assume that the trend is bullish. Moving on to the last step, it is time to head down to the intermediate time frame and use a momentum indicator. You can select any momentum indicator that you like, but for this example, I will use one of the more common indicators, the relative strength index. In the H4 intermediate time frame, we want to see momentum slowing down as price corrects. Depending on the momentum indicator that you are using, this could be in the form of divergence, overbought condition, or a crossover. In this case, since we are using the relative strength index as the momentum indicator, we want to see a divergence or the relative strength index to be in the overbought region. It will vary from case to case depending on the indicators you use, so you must choose a momentum indicator that you are very familiar with. Otherwise, you can opt to use the relative strength index just like what I am doing right now. Once you have confirmed that the intermediate timeframe is in alignment, drill down to the entry timeframe to look for your entry. You want to use price action such as a trendline break or break of structure to enter your trades. Now, because there can be 1,000 ways to enter your trade, it is impossible to show you all possible permutations in this video. So I will go ahead and use the trendline break as an entry trigger. In this case, we see that this descending trendline was broken after a correction. This will be our entry trigger, and you can set your stop loss below the recent swing low. Regarding your take profit levels, it is entirely up to you. I will, however, recommend using a trailing stop loss in this case. This is because you have the higher timeframe trend supporting you, and thus there is a good probability of catching a trend that moves big. It will be wise to be more patient with these setups and let it ride rather than lock small profits quickly. And that's the entire strategy for you. I will now put together all 3 steps into another example, so keep watching to make sure that you understand the 3 steps that I have outlined earlier. First, we identify the longer term trend in the daily chart. We see that price is trading below the 200 period exponential moving average. Thus, we want to focus on selling. We head down to the intermediate timeframe H4 and see that the relative strength index is in the overbought region. We drill down to the H1 timeframe and look for an entry. We see an ascending trend line here and wait patiently for price to break the trend line. When price eventually breaks the trend line here, that is our entry trigger. We set in the stop loss at the recent high with a buffer and trail our stop loss as price moves in our favor. Here's a brief recap of the 3 steps. Step number 1, select your triple screen timeframes. Step number 2, determine the trend. And step number 3, identify entry triggers. The triple screen system is an excellent framework to help you develop your very own trading strategy. It is not rigid since it doesn't force you to use a specific set of indicators. In fact, I have repeatedly mentioned that you should use indicators that you are most comfortable with. The point of the framework is to help you align all 3 timeframes so that your trades have the highest probability of succeeding. Comparing it against a single timeframe analysis, it should be quite clear why this triple screen system dominates. Nonetheless, it is not a perfect system, but it does an excellent job in helping you ride long-term trends. And that's all I have for you in this video. I hope you got value. Remember to like this video, subscribe to the channel and comment with the emoji plus win Forex signals to enter yourself into our giveaway. The winner will be announced in the next video, so turn on the notification bell and check to see if you have won. I will leave a link to the book summary of Trading for a Living by Dr. Alexandra Elder in the end screen here. Do check it out because it contains many other nuggets of wisdom that isn't covered in this video. Thanks for watching.